Hi, my name's Jared. I'm a small business owner based in Orlando, Florida, and I wanted to make a video today to review the topic of unapplied cash payments. It certainly is one of the top 10 or 15 items I tend to see at the end of the year when working with small and medium-sized businesses. Typically, the business will run the P&L report, say, well, hey, I see these unapplied cash payments. What are these for? And how do we fix them? So I do want to review briefly the QuickBooks Online unapplied cash payment information that they have here, the webpage. And it does show unapplied cash payment income on your profit and loss. When you run a profit and loss report using the cash method, you may see unapplied cash payments, cash payment income. This account is created by QuickBooks for proper tax reporting. And we'll see down here the most common item is you entered payments without matching them to a sales form. And we'll see down here the steps to correct this. Does include creating an invoice, and even though we're on the cash basis, and this is how QuickBooks is following proper tax reporting. And I did want to visit the this website here. It's very commonly used by tax professionals, and it's the legal definition for constructive receipt of income. And I am a licensed tax professional. However, this would not be tax advice. Also, this would not be legal advice. It would be recommended to, if there's any questions, contact a tax professional or a lawyer to review those items. I certainly am available for bookkeeping and other consultations. But generally speaking, the standard definition of constructive receipt of income, the doctrine is constructive receipt of income is a tax term which determines when a cash basis taxpayer has received income. Constructive receipt of income occurs when a party obtains income that is not yet physically received but has been credited to the taxpayer's account and over which they have immediate control. The taxpayer is liable to pay taxes on all income constructively received. And then we'll see down here as well, most commonly, a check received today is constructively received, even if it is not cashed, because the recipient has immediate access to the funds. And it's that constructive receipt that receiving those funds that really is the determination. And it's more commonly we've received a deposit in the bank account. That's more common, I would say, more so than the check received not cashed. However, when we do receive a check, similarly, we enter that check on the date it's received in the system to reduce the accounts receivable balance. So even before the check is taken to the bank, that's the process to record the payment. The invoice is added to the QuickBooks Online software, even though we're using the cash method. This is known as OCBOA, Other Comprehensive Basis of Accounting, or what's referred to as the hybrid method. And that's, generally speaking, most small and medium-sized businesses do use the cash basis method of accounting for bookkeeping, accounting, and tax reporting. Most commonly, it's the method that has the least overhead and burden on the business, the least cost to complete those that requirement to keep comprehensive books. The hybrid method of accounting typically is a cash basis taxpayer who's also keeping receivables, payables, and sometimes inventories. So very common, fairly common for small and medium-sized businesses. So here in the QuickBooks Online account, I'm simply going to enter a payment. I'm not going to apply it to an invoice, and we'll see that it will show on the unapplied cash payment in the unapplied cash payments account on the P&L. So I'm going to select plus create. I'm going to select receive payment. Okay, so I am simply going to add that payment. I'm just going to select the plus create icon there. I'm going to select receive payment. I'm going to add a customer, the first customer, Amy's Bird Sanctuary. I'm going to add a nice round amount for example purposes, $10,000, and today's date's fine. I'm going to uncheck this invoice. The software will automatically attempt to apply the payment to the next open invoice. However, for example purposes, I'm going to uncheck that invoice. I'm going to select save and close. Yep, it'll save it as a credit. So I'm going to open up that report, standard reports. And I'm going to run the profit and loss through the current date. And I'm going to change it to cash basis so that we see that it does have that account. Okay, yep. And there's that unapplied cash payment there, sitting just there. Typically it's for a lower amount. Maybe it's $150, maybe it's $75 or $500, but I added it for a nice round, even $10,000 for example purposes. And next we'll revisit that QuickBooks Online page, and it'll show the steps here. And effectively what we're going to do is we're going to create an invoice, and we're going to apply the invoice to the, apply the payment to the invoice. So now I'm going to select plus create. I'm going to select invoice. I am just going to add that invoice for that sample amount, that even $10,000, and I'm simply going to save and close it there to save that invoice. And we'll see once we review the profit and loss report, the unapplied cash payment is still showing there. Let's see, $9,761. Okay, very good. It applied. Okay, so it did apply a portion. So QuickBooks Online is automatically applying the payment to the next open invoice. So I'm going to uncheck that invoice here. And I am going to check that invoice that we just created, number 1039, that even $10,000. So we'll select record and close, and we'll see that will take care of that unapplied cash payment. It's no longer going to show in that account. It's going to refresh the report there. And change that back to cash basis. Yep. So we'll see now we'll now see that unapplied cash payment is now showing in the income account. The only other item to review is sometimes if we have the payment, we have the unapplied cash payment showing on the report. If we have an invoice that's already been created, if the invoice date is subsequent to the payment date, then we would need to either edit the payment date or the invoice date. So here in this video, we went through and added an invoice, and then we applied the payment to the invoice. So there's no longer an unapplied cash payment. However, if we did apply the invoice and the payment date was a day or a few days before the invoice date, it would still give that unapplied cash payment. So we would just want to make sure that we're receiving the payment after the day that we're recording the receivable. Thank you very much, and hope you have a nice day.